All right, folks, thank you for tuning in. Let's get it started. July 26, 2023, and we have the Fed continuing to rug pull the U.S. economy. Let's get right on into it. The Fed decision has just come out. They're going to raise by another 25 basis points. That's 0.25%. And the federal funds rate is going to be at 5.50%. We got to see the markets react. We take a look here at the sticks on Bitcoin, back up to 29,500 briefly on the 15-minute chart right here. Watching this thing right now at 29,389. So basically 29.4 is where we're at the time of this recording. Ethereum's at 1874, XRP at 71 cents. Watching it closely, but we are getting that volatility coming in. Federal Reserve raises interest rates by 25% to 550, the highest levels in 22 years. Kobesi letter coming in with this one. Fed Chair Jerome Powell has made it clear that inflation and jobs reports between now and September are huge. They are taking things meeting by meeting, and just about anything is on the table. If CPI falls again in July, the end of rate hikes likely happen today. Data is key. And I would just add, it's going to be interesting to see if headline CPI falls again, which is 3%. That's okay. That's fantastic. They like to cheerlead that. But we have to remember that the preferred inflation gauge is that core PCE, which has still been at about 4.6, 4.7, a little bit more sticky. But what we've done is we've effectively rug pulled the economy. And I shouldn't say we, because this is the Federal Reserve, the private group of central bankers that have hijacked this country for the last 100 years. And Peter Schiff shares this. It's been 22 years since the Fed funds rate was 5.5. Then the national debt was 5.6 trillion. Today, it's at 32.6 trillion. At 5.5% interest on the national debt was 300 billion. Now it's 1.8 trillion. 22 years ago, the defense budget was 400 billion. Today, it is 840 billion. So just to put things into perspective, right, much different since the last time the Fed funds rate was at 5.5%. 5 trillion in debt versus 32.6 trillion in debt. We're approaching that 33 trillion in debt. And we have doubled that defense budget from 400 billion to 840 billion. And the interest payments alone, right, is now going to be at 1.8 trillion. Truly incredible to see. They've caused damage to our government, right, having to pay more on our interest on our debt. They've caused damage to Main Street, and they've also sacrificed some of the small and regional banks as well. Many of these banks have bonds on their balance sheet that are at a net loss right now. Bank of America, 100 billion. The banks in the United States tallying up over 600 billion in losses on their bonds. Now, you also have to think on all of the loans that they've given out on businesses and real estate as well. They gave out those loans at 3 to 5%. Now we have the Fed funds rate up at 5%, so your mortgages have broke above 7%. And then you also see that the auto loans are now much higher as well. And there's actually a lot of loans that are getting denied right now for auto loans and for mortgages as well, along with many people who are just out of the market right now. They're just out of the market completely because prices on United States real estate, we covered it yesterday, according to Kay Schiller, have risen for 5 consecutive months, back approaching the all-time highs that we got in 2022. So we're back to all-time high for real estate. The mortgage interest rates have made it, twice as less affordable, I guess. I don't know if that's the right word, but less affordable by a lot, going from 3% mortgage rates up to 7% now. And then same thing for the auto loans as well. And folks have completely tapped out their credit cards. They're having to use their credit cards to pay and feed their family. And you're now starting to see it hit the conversation here amongst folks, inflation and how this whole system's been set up. We have Robert Kennedy Jr., and I really love the role that he's playing right now, Robert Kennedy Jr., in the rhetoric that he's interjecting into the conversation is important, and I like to see it. So presidential candidate Robert F. Kennedy Jr. says the financial system is designed for the rich to strip the middle class of their assets and equity. Now, I'm not going to play the clip. You guys get the point. And as we've been reiterating right here, this has been the plan all along. They don't care about sacrificing the middle class and poor. They don't care about sacrificing Main Street businesses. They don't care about sacrificing the small and regional banks. Right? The large, big banks, the systemically important banks, JP Morgan, Bank of America, and others are going to get to eat up their competition. And the Fed has been the one providing that backstop. And now we know from Janet Notel and Yellen saying that at the time of your bank's failure, we'll decide whether or not you're systemically important, i.e. whether or not we'll bail you out, or if we'll just let you fail. And so this is rug pulling Main Street, rug pulling real estate, rug pulling and popping the everything bubble that we've had here in the United States. But it's not just here. You look across the pond at our friends in the UK. The UK government faces €150 billion bill to cover Bank of England's quantitative easing loss. So $150 billion problem right there. And that's from the quantitative easing losses that they have took on. Back here to reiterate the point, according to the National Realtor Association, 75% of homes in the U.S. housing market are beyond the reach for middle-class buyers per the NRA. So you guys are seeing this is hitting banks across the pond, all throughout Europe. You're seeing it back home, small regional banks. You're seeing real estate come unaffordable. And the real estate reset that's underway is massive, an incredible opportunity for us. This is why I'm getting all my ducks in a row so that I can move on the real estate asset class in a major way. So many deals are about to come online for us. And so I'm looking forward to breaking this down further with my Discord community. If you guys are looking to get tapped in with them, you just go on over to my website, Patreon, and get access through there. Okay, so it's just zachrector.com. Sign up for Patreon, get access to the Discord community. And in the community, we are going to be learning on how to do our due diligence, how to review these deals, and understand these asset classes in a way that we can take our gains from crypto and look at getting a deal done. So really looking forward to that because it's clear that a real estate reset is underway. Same thing with Main Street businesses. How do we go out and buy businesses? How do we cut deals with our competition to acquire their businesses as they're getting ready to turn the key? They're getting ready to close up shop. How do we pick up the assets that are worth accumulating and acquiring? So it's just an incredible opportunity right now for those that are going to be ready, those that are prepared, those that are staying liquid. But for many, right, they're not going to be able to afford this. This is going to get tight. They are going to have to give up. And I don't want that to be our community. So please, if you haven't already, please subscribe, hit that notification bell, because whether or not you join us in the Discord group, the reason why I put out content on a daily basis is so that we can have our community not go bankrupt, not go bust, not get lost in the real estate reset, in the everything bubble that's now been popped, so that we can understand that it's no longer a participation trophy economy. You don't get a win just off of showing up. You actually have to have a real business, be providing real value for your community. And so we're trying to teach people how to do so. But I wanted to wrap up this session by highlighting what is happening right now with XRP and Ripple is so massive. It's going to be happening very quickly, and many people are going to get left behind. We are no longer, speculating on CBDCs, on stablecoins being built on the XRP ledger, on banks and institutions acquiring XRP using ODL. It's all starting to happen, and we now have this most recent stablecoin deal that is now live in Palau. So Anthony Welfare shares this tweet: "We are live in Palau with our stablecoin built on the XRP ledger. Not to be confused with the private central bank ledger that Ripple built out, but this is the actual public mainnet, the public XRP ledger. And you can go track these transactions and go track these wallets actually on the XRP ledger because it's being done on the public mainnet. Okay, now this is Palau stablecoin, and they are working with the Ministry of Finance over there. Exciting project, definitely an exciting project underway here. And then we look at the TA. What we see right now is a setup that is so darn bullish. So exciting. Dark Defender. XRP is super bullish with no change. I own the best digital asset with regulatory clarity, which is following a pattern, not the lawsuit, as highlighted many times. So we've already been in this structure. The lawsuit, the news just comes in and follows along. But this pattern that we've been calling, and what's coming next, is wave 3, which will allow XRP touching the targets sooner than you think. Now, Dark Defender originally shared this chart on July 23rd, just a few days ago, and he says that we have found support at 71.5 cents, and the daily chart is inside the bull flag area. The daily trend indicator has not turned green, but weekly and monthly are. It means starting Monday, XRP will begin fighting between 77.81 and 71.57. We expected August as the break. We had the first leg earlier in July. Specifically, XRP is to decide where I expect the uptrend to continue as the second leg on or before the 27th of July. So we will see the decision next week, first towards $1.67, then $3.39 will be in sight. So what did we get? This week, we got that retest coming back down. I think it wicked down to about 68 cents, depending on what platform you were looking at. I'm going to pull up XRP right here. Let's look at this XRP chart and what we did this week. Let me back on out to the 4-hour chart and let's take a look at the sticks here. Zooming out. And you guys see that we did come on down to about 67.5 cents, and that was on Monday. So as Dark Defender predicted on Monday, we started that move. We came back down here, and then on the 24th, Monday, July 24th, that is when we came on down to 67.4. But that's on Qcoin. So depending on what platform you looked at, about 67.5, 68 cents. XRP solid retest. We are still trending sideways right now at about 71.297. So, 71 cents here. We did trade up to about 72 cents earlier today when the market ticked back up. So we're going to be watching this. If we do break through this level, we'll have to go find some new resistance, some new support down below. But I really do believe that we have to see this thing get killed before we have disrupted the pattern that has now begun. And, $1.67 on the upside, 339 is another target that he throws out there. To me, it's clear. I think that we have a really good move coming in, and I just want folks to be prepared. And, even if this move gets extended out, if this timeline gets extended out, I'm expecting the bull run to not come back until next year for the rest of the cryptocurrency space and the rest of the markets. But in the meantime, if the Fed does end the rate hikes and starts to pivot, we could see that come in sooner. So we're watching that play out. But as expected, we got that 25 basis point hike today. And what that means is that we continue to see the United States economy get rug pulled. Markets are delusional. Markets are still trained to buy the dip, and markets are staying resilient. The real estate asset class and the real estate market is a great example of that. You have an additional layer of emotion that gets tied into the real estate market, along with some of the best financing, 30-year mortgages in the United States, to help keep markets propped up. Now, you also have to look at factors. We just got Biden forgave more student loan debt just within the past 24 hours. And so they're doing everything possible to kick this can down the road and to continue to, keep things propped up. If folks have to end up paying the student loan debt, they're no longer given access to new, fresh credit, right? This is going to get tied out here as we're expecting this to continue through the rest of this year. XRP does happen to be in its own reality, though. So that's why I can have two opposing views in my little mind right here, where I'm talking about XRP potentially ripping out to the upside. $1.67, $3.39 is another target that Dark Defender throws out there. We can talk about that because XRP is in its own reality. Okay, when it comes back to the overall stock market and the real estate market, and the common markets, I would say, what we're seeing right now is that they're going to continue to the downside for a little bit longer here. We got a lot to clean up, and you're seeing the big firms, you're seeing Wall Street acknowledge that as well, that we could be entering an earnings and an employment recession. And that's what we're starting to witness. Amazon just put out a notice today that they're bringing folks back to the office. And if you don't come on back to the office, they're just going to assume that you've done a voluntary resignation. And so it's a changing market right now, right? And it's a tightening market. So for those of us that are prepared, ready to take action, incredible opportunities coming our way. But a lot of folks, middle class, Main Street, going to get squeezed out. I don't want that to be you. Make sure you stay tapped in with us here. Make sure you've subscribed, hit that notification bell. And if you're interested in anything else that we have to offer, just head to my website, ZachRector.com. With that being said, I'm going to roll, guys. Let's smash that thumbs up for me on the way out. God bless all of you. We'll see you in the next one.